Morning. Sorry, I'm late. Sorry, teacher. I was just engrossed in tweaking the code. That's all I seem to do all these days is just tweak code. Yeah, sorry, I completely lost track of time. I sat down like at 7:30 thinking, I know what I'll do. I'll just quickly get all the inputs sorted on the EA. And then I was like, oh my God, 10 to 8. So yeah, I'm getting all the inputs sorted on the EA, basically. Where's it gone? So it's ready. It's ready. It's all done. Ready to go. So yeah, I'm testing obviously now. So I'm just starting tests again. Optimization tests. So this one's only going to take 60 hours. Only 60 hours. It's one instrument, one set of tests. I've got 5 set of tests to do with each of them. This one only takes 60 hours. So probably sometime in the next maybe 2 months I'll be finished testing. But I'm going to do some tests. I'm going to run some quick tests basically to get some quick set files together. But yeah, lots of testing to do. Morning, Ladder. Morning, Diamond. Here we are again. Yep. So watching DAX this morning. See where we go. Had a pretty good day yesterday. Not amazing, but oh yeah, all history. That would help. So banked a bit yesterday. Well, the EA banked a bit yesterday. Obviously, I'm not me. I'm not doing anything. So yeah, I had a profitable day again yesterday with the new breakout EA. 2 days to go. 2 days to go. I've got $1,800 of space to play with. So it's the only annoying thing. That's why I like EA. With EA, if you pass, you pass, and you're through to the next round. You don't have to worry about waiting 5 days. But anyway, I've chosen to do it with my Forex funds, and I shall stick with them. Right, where are we? So ADRs, no ADRs today so far. Yesterday was a bit meh, bit up and down. I think we're going to get the same today, to be honest, because it's obviously ahead of all the rates next week. So market opens, DAX opens in 2 minutes. So we'll see where we go from the open today. We're gapping up today. There's close. There's yesterday's close. So we're opening gap up. So we'll see what happens today. Let's put that actually on the close, shall we? Just there. So we've got potential gap fill short this morning. And obviously the other option is to pull back and go for a rally. Yesterday, we had a pause candle again. So a couple of down days. We've broken through support. Pause day, bullish pause day, and a bullish start this morning. So we'll see what happens at the open. So news today. We obviously have nothing much yesterday. We had only unemployment claims, which came out as expected. Spot on. It's unusual. It's very rare. Oh, no, it's not actually that rare, is it? Yeah, no, it is rare. I mean, that's as these are black, but they're not as expected, are they? These. So it's very rare that we get an exact hit. But the market reacted fairly positively to start with, and then it had a bit of a dump. So no real impact there. The main news to this afternoon is 1:30 core PPI, and then we've got University of Michigan sentiment this afternoon as well at 3 o'clock. So both of those tend to rally the market up a little bit, but I don't think we'll get any directional bias on anything today because obviously it's all next week. So I would expect a rotation day to day, up and down on everything while we're waiting for next week. And then obviously the week after that is week before Christmas. So it's basically today's last day of trading, really. Apart, obviously, it's not the last day of trading. Next week's going to be absolutely manic, but last day of normal trading before January. And then next week is just, chaos. Overnight news is nothing exciting at all, really, overnight. Chinese CPI figures were as expected. Not that really impacts us massively. Nothing much else, really, overnight. All a bit quiet. Recession is not inevitable, Yellen says. So we'll see. They certainly seem to be doing okay, I think, the US. So we'll see. They may well come out of this with a soft landing, as they've been talking about for months, but you never know. CAD Swiss is under pressure. Okay, so open market's open now. Opening ranges going in. Oh, another whack. We're getting so many big opening ranges at the moment. These are nasty. Big opening ranges are very hard for breakouts. Might be worth investigating, actually putting a filter on the new EA to maybe filter some of these big ones out. But equally, sometimes when you get these big ones, you just get a collapse out of them as well. So it's horses for courses, isn't it, really? But big old range going in this morning. What was I going to say? Yeah, so ADRs is nothing to look at this morning. RSIs, we've got a couple. We've got Aussie CAD extended. So the Canadian dollar, as Lad has just said, CAD Swiss is under pressure hard again. So the CAD didn't fare particularly well yesterday. We obviously had the rates this week for the CAD, which came out as expected. We got a rally off of that, but it was very short-lived. So we need to see if the CAD can fight back, basically. But OddCAD, we've just had a reversal alert on. That's up at RSI extension on the 4-hour. So it's only just got up there. We know the Aussie dollar's obviously been very weak, but it's having a little push against the CAD because the CAD's been weaker. We've got Euro US dollar, which is extended on the hourly, which is worth having a look. Oh, it's already gone. Missed it. So if the alerts. Oh, actually, no. Saying that. It's just triple topped during Asia. So you've actually just got the reversal alert on that for a potential short, which if we get positive numbers coming out on PPI this afternoon, we will get a rally on the US dollar. So that's probably not too bad to look at, I don't think. Morning, Stevie. Morning, Jane, if I didn't say morning. I remember. Oh. Just activated my bot on live. Made 50 cents. I'm quite excited. So yeah, extended on the Euro US dollar. Tricky one, Euro US dollar. They're both kind of longish at the minute, but I kind of like US dollar stronger, so I'd be more inclined to short this. So it's in a good spot for shorting at the moment. And US dollar Swiss, nice extended to the downside at a double bottom. So very nice extension. US dollar Swiss looks like a lovely long, actually, from there. I'm quite tempted to take that, actually. Just want to watch this range go in. God, that's a big one this morning, isn't it? Looks like they're going for the gap fill, which isn't far away. There's your range low, and there's the gap. So not far at all. Yeah, looks like a lovely long on the US dollar Swiss. US dollar Swiss, obviously, as we know, is a bit of a crazy beast at the minute. It's up and down like a loony. But we're down at the, obviously we got the bounce off of the double bottom. We came back, retested it, looked like we were going again, came back down again, and we are retesting a double bottom. So potentially this is a very nice W pattern reversal on the 4-hour. We've just got the reversal. We had a reversal alert, didn't we, on the 4-hour? Did we? No, we didn't. Didn't quite get it. So we've just put a new low in. So you've got a really tight reversal alert actually now, because we've just put a new low in. That would be a structure break in effect. I mean, realistically, that's what you'd be looking at as a proper structure break. But That's a really nice tight entry. Hourly is probably the best on this. Yeah, get hourly reversal down there. That's got a decent 125 ADR back up to the highs. So that's a nice looking long opportunity there. M5 reversal alert just got. So that's good. I like the look of that. US dollar Swiss. If you fancy a quick long today, based on PPI news coming out as expected or positive, we should get some decent strength on the US dollar. So you could easily get an ADR hit on that this morning. Not this morning, this afternoon. Nice looking long opportunity. Opening ranges are in. I'm short one. God, that's a biggie. That's a real biggie. So I've got the EA set up pretty conservative this morning. Another day, another squeeze. Yeah, as Alex just said. So a lot of these pairs that have been squeezing that look like they were giving a little bit of relief played out very, very nicely yesterday. So we had nice strong moves on Aussie New Zealand, for example. We had nice drops on New Zealand dollar CAD. They're just pulling back at the moment. So obviously Asian session is a totally different session to London and New York. So Aussie New Zealand. So the only positions I've got at the moment, Aussie New Zealand. I scaled out of some longs on this yesterday. I had aggressive positions on from when we got this 3-bar reversal here. I had an aggressive position on the break there. I had one there, and I had another one somewhere in there anyway. But I closed them out yesterday when we broke the highs of yesterday's high. Actually, I didn't close them out. As soon as we broke yesterday's high, I put a trailer on them and I got stopped out there. So I had 3 nice positions, which allowed me to do a bit of DD control, but I'm still in fairly deep on it. New Zealand CAD, I did the same thing. In fact, I did most of my drawdown control on New Zealand CAD yesterday. So we got the drop here. We're just touching yesterday's high at the moment. So we are just going into an accumulation. Again, this Canadian dollar is struggling at the minute. So we'll see what happens today, but we have made a new high. So they've just taken liquidity from there. So potentially we've got a decent short on our hands at the moment. Morning, Seymour. So we'll see what happens with these CADs. We'll have a look at all the pairs in a minute, but as I say, there's not, anything we look at today is kind of for today. It's all going to be changing next week. So, so yeah, nice shorts opportunities for the gap fill. Not very far to go though, so we'll see if we get back down to there. But it's a big old range. We might well just sit around in a range day today. That's the problem when they put so much into the opening move. It makes trading inside very, very difficult if it doesn't break. But them's the mornings you can't do anything about. Morning, Sega. Morning, Neo. Neo's on time this morning. Timings are out on this. Look. They've done it again. My Forex funds, the timings are out by 2 minutes. We had this on the DAX last week. Data issues. They keep getting these data issues creeping in. I was just going to see what the opening range on the FTSE was, because it opened. I've got the FTSE. I've got all the indices running on another monitor. And I was just going to see what the opening range was. I can't tell what the candle is. It's this one, isn't it? Well, it's not even that. It's, yeah. I thought that was a nice opening range break, but it's not, because the data's screwed again. The FTSE's coming down quite nicely. FTSE and the DAX quite often move in tandem. So it's worth watching the FTSE if you got it. Right, okay, so I'm going to run through all the pairs this morning, because there's not a lot really alert-wise apart from those bits to have a look at. We've got no ADRs, and as I say, yesterday was very up and down, a little bit rangy. So oil yesterday, again, rejection, drop. Really not happy oil at the moment. And, I said to a few people that were looking at potentially longing this in the Telegram group, when you break out of any range, obviously, if you're looking for a range breakout or you're looking to mean revert anything, you got to think, where are we going next? So where is the next resistance that potentially could act as a buffer zone, and how much distance have we got to go? This low here that has just broken, there's nothing really. I mean, until you get down to potentially there, but more likely that double bottom, isn't it? Which is a couple of 100 ADR away. It's what we call clear air. There's nothing to bounce off of. There's nothing to support it much apart from that low. So the fact that we've broken down there, we tried to push up yesterday and we've rejected again. I'd be very worried about longing oil from here. And if you are long it, try and get out. I would. Although saying that, from a mean reversion perspective, obviously, this is 5 down days. So 5 down days on the trot. If you can find 5 down days on the trot, there isn't one there, is there? But typically you will get a pullback after it. So because the market is obviously very, very stretched when you get such a strong move down. So it's due a pullback, but I wouldn't be looking long really on this at the minute. I can't figure out what's going on with oil. There's so many things affecting it at the moment. We've got OPEC mumblings about caps. We've got the price cap of $60 put on by the Eurozone. We've got Russian tankers sitting in the sea waiting to deliver, but they're not happy to take $60. There's just so much controversy around it at the minute, with pipelines blowing up. The last 3 months with oil have been absolutely turbulent. So you've got to be a little careful with it. Market is obviously very bearish on it, but the prices that we're at the moment, with demand increasing through China, you would expect we should be getting up, prices moving up, but it's not happening. So yeah, market at the moment obviously very, very weak for oil. Looking at the indices, I had a quick look at them. Obviously, we're in a big bear market. We know that. The DAX came straight off of resistance very, very nicely. We got the reversal of the daily there. We've pulled back. Obviously, we're in an uptrend at the moment, but it is, an uptrend like this, when you look at the economies around the world at the moment and the bear market that we're sitting in on the US indices, this is more likely a pullback or a range formation starting than the bear market being over and us going into a bull market. So I wouldn't expect the 24.72 sort of area to hold. I would expect us to start next leg, but this close to Christmas, we haven't obviously got the Santa rally we were expecting, which is kind of what my analysis came to the conclusion of. In previous bear markets, we haven't had Santa rallies, so we haven't had it this time, but we also haven't had a decline, have we? We've had nothing but sideways movement. So no rally, no decline. But we are starting to see more signs of bearishness coming in. But obviously, last couple of days, we've had a lot of resistance to the bear market. So difficult to tell still at the moment. But yeah, we are breaking down at the moment. Second short on DAX. So into short, this is the gap fill here. So watch for a bounce. No sellers, no buyers. There we go. Would expect some kind of resistance here off of limit orders at the close, but doesn't seem to be a lot, does it, this morning? So I've got 7 seconds. Third short is going to go in there. There we go. Third short. A little bit of slippage again. Stops to break even on those 2 positions, so those are risk-free. Let's see if we can get a nice collapse and trend. So we've got a long way to go on the DAX from a support basis. These aren't particularly great propulsion candles because this is the range high really. So neither of these actually broke out of that range high. So this is obviously just the start of a momentum move to the upside. But I'd be obviously just watching all the lows at the minute. That area specifically is where I would probably expect to find support resistance from there, previous area. Yeah, so that would be target 142.55 or somewhere around there. Somewhere around there. Back down there. So there's your resistance and support. So that's where I'd expect to see some limits. We can get down there. So yeah, so DAX obviously is just starting to roll over. So potentially, obviously, the market structure is bearish at the moment. With the US indices yesterday, we had very similar. We obviously with the DAX, we got a sort of hardly. It's more of a doji, isn't it? But you know, it's not really a hammer, is it? It's more of a doji, but dragonfly doji that is. So yeah, bullish basically. But with the NAS, we had a proper bullish engulfing. So proper rejection of these lows. This area here has just, they are not interested, are they? I am not interested in going below. Basically, it's the 11,500 big round number there or thereabouts. You know, it's never a exact. It's 11,500 is basically what's holding. So we're in a range at the minute. So there is. Remember, I said yesterday there is every potential from here to rotate back up into the range, and you know just stay range bound for Christmas, which looks like the US indices may want to do. S&P, same thing. We had a bullish engulfing and an outside bar, and the Dow bullish engulfing. So again, 3-bar reversal, 1, 2, 3. Potential move back up to the upside, but we'll see. DAX is obviously rejecting at the moment down at these lows as well. So we'll see what happens. But yeah, it's difficult with the indices at the minute, especially ahead of next week. No one's really putting any money into the stock market because they don't know what's going to happen with everything moving forward. We're going to get some clues as to, you know, what's going to be happening next week, and then we'll get some movement, I think. So, but nice big rejection down there. And oil, what happened with Bitcoin? Yeah, just range bound. Right, so let's flick through everything else. If anybody's got anything specific they want to have a look at in any more detail, then let me know. But I will run through everything this morning. Come on, DAX. This is on very, very low risk at the moment. Obviously, the EA, because it's just managing the account until I get through to Monday, which will be a pass. Another 50k under the belt, which would be very nice. Right, so Aussie CAD. Aussie dollar, we've obviously had the GDP figures this week, which were a miss. We had the interest rates, which were a hit. So mixed messages for the Aussie this week. No real difference in bias that we can see. We've got low speaking next week for the Aussie, and then we've got their unemployment figures. So that is a massive. So inflation figures, interest rate figures, unemployment figures, they are the 3 key drivers for monetary policy. So unemployment next week will be another big one. If we get positives off of that, we should see some really good strong movement in the Aussie dollar. Obviously, this has been beating the Canadian dollar down. So if you look at all the other Aussie pairs, everything else Aussie is being trampled into the floor, apart from the US, because US has been weak. But US and CAD have both had a bit of a weakness, and the CAD more so than anything else, based off the back of oil. You know, major export is oil, and oil prices have halved. So yeah, they're not going to make anywhere near as much money, which is going to be hurting them. They've got the highest interest rates out there at the moment at 4.25%. So and they came out yesterday and said we might stop, which was interesting. I don't think that's going to be the case because it's, interest rates are dictated by inflation. So, you can't come out and say things like this. We're shifting from deciding how much to raise rates to deciding whether to hike rates. It's not your decision. Your decision is made by data. And if the inflation data says you need to raise rates, you will raise rates, because otherwise you're never going to get out of the problem. So I think that's a bit of scaremongering personally, but yeah, I mean, CAD obviously, as we know, has been very weak. So the Aussie's taken full advantage. We're extended on the RSI again. There is potential to get positive news off of the Aussie next week. So it's a tricky one at the moment, the Aussie to play as a short. If you look at the CAD next week, we've got have we got no, we haven't got any news on the CAD next week. Thought we had something on the CAD next week. No, we haven't. Oh, yeah, we haven't got Macklem speaking. I knew there was something. Yeah, it's just Macklem speaking. So Aussie has got every chance to have a push, a fundamental shift, basically. So the Aussie obviously can have a fundamental shift in either direction or stay neutral next week. The CAD, nothing much. So when you're looking at Aussie CAD, you need to be thinking what they're going to do with that next week with the unemployment figures. So very extended. It has had obviously pullbacks, profit take moves, which have been, from that moment on, we haven't really had a profit take, but we've really just gone into an accumulation, which we've broken out the highs of. But very, very, very extended, as you can see, and it's been embedded. So I like it as a short because I think the CAD should really start to power up soon. But I think it's being dragged by oil. We're seeing some strength coming through on the US dollar, and that will tend to take the CAD with it a lot of the time. But we're not getting oil helping it in any way, shape, or form at the moment. So we will see. But I think there's better things to trade out there at the moment than this one. It's not at any decent technical levels either. This is a good example of what I say when you break above a resistance. Where are we going to next? So you've got this high here, which is a fairly decent level. Yeah, it's been respected quite a few times. Other than that, you're coming up somewhere into this area here. So it's kind of reaching a point of no return, isn't it? And it's either going to get a reaction there and start a pullback. Look at what happens when we break down into this sort of movement, which we've got in the opposite direction. We pull back into the moving averages if we're going to trend. So we'll be looking for a pullback. So it's all set up for a short. But again, it's going to be figures driven. And we've seen it with other things like the Aussie New Zealand, obviously, when those figures all come out in the opposite direction together at the same time, and you just get negative after negative, it really doesn't matter. We still got a pullback. We're still getting pullbacks to the moving averages. Yeah. Which you've got to take full advantage of when they happen. So yeah, Aussie CAD, I kind of like it as a short, but again, everything this week is just, we've got to sit on the sidelines a little bit this week, I think. Aussie dollar Swiss, completely sideways, no clue. We're range bottom, could go up, could go down. We've got Swiss franc next week. We've got major news on the Swissy next week. We've got the policy rate. Be interesting to see what they do with that. So yeah, we're in a holding pattern on the Swissy. It's going to go one way or the other next week. I suspect the Swiss franc will be stronger than the Aussie, typically tends to be. So I kind of like the range low buy here. Didn't quite get extended. As you can see, we haven't been extended since back here. We've just been, sideways, as you can see. Yeah, indicators, all they do is they tell you what price action is doing 90% of the time. So you can see it's in a range. Pulling back at the moment. So we have had a reversal alert and we've had a retest, and it's retesting again at the moment. So it's not particularly strong, as we know. Aussie dollar yen, all the yen pairs, again, the yen is the only thing really, apart from New Zealand dollar, that isn't having an interest rate announcement next week or an inflation announcement next week. So Japan is the one that is sitting on the sidelines. So could see it buffeted about a lot like next week. But overall, I think we should really be looking for shorts in this now. But again, it could all change next week. But they've obviously, the intervention has helped and it's stabilized the yen. So at the moment, I think at the moment right now, with the inflation figures and the way that everything's going with the yen, which is not good, obviously, we will see this bounce around a lot. But I'd rather have a negative stance on it. So reversals to that. We had New Zealand yen, I think, wasn't it? Hits. Did we not get an extension on New Zealand yen? Yeah, there. It was on Wednesday, wasn't it? So I said any ADR hits to the upside. So you had a lovely ADR hit. So any ADR hits to the upside, any RSI extensions to the upside, I'd be looking for shorts. And they may absolutely fly, but at least you should get a scalp out of them. So I like them all short. So Aussie yen, like it as well. Somebody once said to me, using indicators as trade is like driving your car forwards, but using the rear view mirror. Yeah, every indicator lags. Every indicator lags. But they are useful, very useful for identifying setups. That's why we use indicators. But as long as you understand they are telling you something that's already happened, then yeah. The market reverse alerts indicator, it draws in market structure. It shows you when there's been a break in structure. It shows you when there has been a break in structure, not when a break in structure is starting, because price action happens before the break in structure, always will. The problem with trying to get in on price action is you are basically, you've only ever got a 50-50 shot and you're gambling. So everything else needs to tie up. You need to have, and that's what I was saying on the video. You need confluence. You need a sign of something happened, and then a sign of something telling you that the thing that's happened in the past has caused something else to happen. So let's take a shot on it. They put the odds in your favor, but all indicators are a start in a move. But they're always going to lag. And obviously, the lower the time frame, the better they tend to be at catching fast movements, but the less accurate they tend to be. So there's, they are what they are. It depends how you use them. If you took a reversal alert there, or you took the retest there, you had a lovely little 5-minute scalp. If you took that reversal alert there, you're in it still, probably. But that's where your bias comes in, isn't it? That's why we use multi-time frame analysis. Should be looking for shorts. So you shouldn't have been taking that one. You should have been taking that one. Last reversal alert was 4 hours short. Well, so actually there's a long one. This is because it's in a range. That's again, indicators. They tell you when you're in a range, but you can see you're in a range. I think personally, indicators are really good for people learning to trade, to identify and confirm your thoughts. Should I be going long or short on the euro US dollar at the moment? I think I should be going long, but the indicators tell you, confirm it for you. So it's just a quick visual guide. But after a while, I could tell you where the moving average cost happened on that chart without having the moving averages on there, because you just see it all in your mind's eye after a time. So indicators have a place, but it's the trader. Indicators are a signal. You're the trader. I'm using indicators here. Look, on this, my indicator here is a line. That's all it is. But I don't need that line, because as soon as that 5-minute candle goes in, I don't need a line on the chart to tell me where to go short. But it certainly helps, doesn't it? Anyway, we're diversifying, aren't we? Diversifying? Diverging. No? What's the word? We're going off topic. Oh, so Seymour comes in with a, by the way, off topic. I spent last night with the AI. Oh, that website, yeah, the chat, whatever it was, AI. It has learned MQL4. It was producing fully functioning indicator scripts for you. Blimey. Interesting. Be interesting to see what it can do. AI is going to take over the world. This is the trouble, isn't it? This is how Terminator started. As soon as they get hold of those nuke codes, we're in trouble. We can actually need to invent a time machine. All right, so Aussie dollar yen, yeah, like it's short from where it is now. Reverse alert on the hourly has just happened, just retested. So yeah, that's looking pretty good for a short right there, right now. Aussie New Zealand, we got the reverse alert yesterday, so we've obviously got these levels. Actually, let me just tell you what I'm going to do. I'm going to get rid of all of it. Start again. It's such a mess, my charts. So we've got obviously where we've turned here. That's the actual low there. It was spot on that area there, right? So it hit to the pip, but it's obviously that area there where we broke through, rejected, came back, price discovery, rejected again, came back through it, accumulated for a few days, and then we actually managed to get through. So we've come back down to this area after this massive sell-off, and we've had a bull day. So this is what we were waiting for, a nice potential 3-bar reversal, Aussie New Zealand. So we had the push down, we had the pause, and we had the push up. Today, we need that continuation. So what we've had in the past when we've had reversals going in this downtrend is we've had screeching to a halt, a little bit of a pullback, and then a next leg. Screeching to a halt, a little bit of a pullback, and then the next leg. We didn't really even screech to a halt there, but this is what I would look for. So the 24 is where I suspect we will get to. And obviously when we get there, it's down to how it moves daily. So if we are going to do this, we might only get that much distance before the 24 catches up and drives the next leg down. We could also pull straight back to the 24 in 3 days and be done. Who knows? But the Aussies, don't forget, we have had an interest rate increase. So that's a plus. That's a plus for the Aussies. We've had a miss on GDP, which is a minus for the Aussies. But we've got no news until February on New Zealand for interest rates. So for the New Zealand dollar, there's no catalysts coming up soon to make a difference to the New Zealand dollar. So if you look at all of next week's news, yeah, where we got the busy week, there's nothing in here for New Zealand dollar. We have got Aussie unemployment, and we have got there's a talking head on the Aussie, is there not? Yeah, they're low speaking, ahead of the unemployment figures. So there's 2 catalysts to potentially low coming out hawkish and driving bullish sentiment into the market, followed by positive unemployment figures. This thing's got every opportunity from here to springboard now, the Aussie. The New Zealand hasn't. So it's looking fairly hopeful where we are at the moment. But I say, don't think we're going to get anything. So you've got to be prepared to sit here for a few days into early next week, potentially. It might go today, which would be lovely. I mean, it'd be absolutely fantastic if I could get out of this today. My average is, after the profits I took yesterday on it, my average is still 175 ADR. My break even was around there. But I took profits. I scaled out of some. My average is actually no, it's about 150. It's below here, basically. It's below this. This is where I think we are going to get to. We've got weekly range hit on Euro CAD. So Euro's pushing. Not against the Swissy. Yeah, strong Euro today. Not against the US either. So this is where I'm looking for us to get back up to. So when you look at the moving average, which obviously we just it doesn't kiss it perfectly every time like it did there, but we end up when pullbacks happen, if we're going to continue in a strong range, this is your strong area, this is your weak area. So weak pullback, stronger pullback. A weak pullback would be somewhere up into this kind of resistance there. And by the time we've got ourselves traded back up into there, you've got to visualize that coming back down on top. That is in the assumption that we are going to get a trend continuation, which isn't a given, is it? If we get positive, massive, good figures on unemployment next week, and Lowe comes out and says something super happy, we could have a nice bull run on our hands on the Aussie. So yeah, kind of like it. We got the reverse alert, first one we've had in a while, which is fantastic. So let's see if we can get that moving. Aussie US sideways at the moment. US dollar has been weak, but obviously we've got some strength starting to kick in now on the US. We're seeing the indices come down. So if that continues, the Aussie's not going to be able to hold up against the US. And obviously next week it's all about the US. We've got the FOMC on Wednesday. We've got the new rate. They're going to be overtaking next week the Canadian dollar, potentially 4.5%. We've got lots of other US news. We've got the retail. We've got the PMIs. We've got the CPI. We've got next week is just US dollar heaven. So there is from the comments obviously we had yesterday. There's a recession is not inevitable. Next week's figures will tell us. If they all come out super positive, then yeah, good on you. And that is when we'll get the next leg down, starting on the indices. So like that as a short. We're not extended at all at the moment. We didn't quite get the hourly extension, but we've had a reversal alert, and it's a pretty good area for a pullback for market structure to kick in if we are going to reverse from here. Obviously, we don't know. So we did double bottom, obviously. So if you look at it, market structure right at this present time is bullish still. So we had a little bit of a wobble in the middle where we had a symmetrical triangle break. But the structure at the moment is actually bullish. So the reverse alert is telling us that we've had a structure break potentially. Yeah, this is the bit that people miss about this indicator. It's telling you there's a potential, and this is what I put in the video and put on the blurb about the indicator. It tells you when there's a potential market structure break. Everybody thinks this is guaranteed now to go down. It's not. It's just telling you that potentially this looks like we could be turning and churning into that. Yeah. Which is your reversal. So, but it's certainly looking good at the moment. So, CAD weak. God, look at the CAD Swiss. CAD yen again coming down. So yeah, falling out of a tree. What's oil doing this morning? It's holding up all right. So yeah, CAD Swiss still falling out of bed. Swiss franc, obviously, we know the Swiss franc. When the Swiss franc wants to be strong, it just will batter absolutely everything. When you've got something as weak as the CAD and the Swissy holding up well, yeah, very, very, very strong move to the downside. It's lovely head and shoulders. You very rarely, everybody will show you a textbook head and shoulders pattern. That's one. That is a textbook head and shoulders break. That's what the books show you. That's the first one I've seen for a long time. Just don't see it very often, do you? It just don't work. But yeah, that one worked. But yeah, dropping like a stone at the moment. I wouldn't want to touch that. Again, I wouldn't really want to touch anything ahead of the Swiss rate next week with the Swissy, because you know what they're like. They don't tell us anything. They keep tight-lipped, and all of a sudden they go, nah, and you like the market gets caught completely off guard. So yeah, anything you trade Swissy, you want to be out of it by the rate announcement, or you just want to make sure you break even on it. I definitely wouldn't want to be long in this at the minute. Not with what's going on with the CAD and oil, and what's got what we've got coming next week. So big drop. You can't get in on any pullbacks on it. There's literally been no opportunities anywhere. Last opportunity you had for a short on this was back on the 18th of November, which obviously is still going. But look how erratic it is This is the Swiss. This is absolutely typical of the Swiss. Massive strength, weakness, massive strength, weakness, massive strength, weakness, massive strength. It's so unpredictable, the Swiss franc, because money gets just injected through the Swiss banking system. And you just get these huge pumps and then dumps. But the dumps are never as strong. Or you get the big dumps and you never get the pumps as strong. You know, it's an erratic thing. You can tell it by the US dollar Swiss. You know, I've used this example many times. This is Swiss franc. Just nuts. Swiss franc. You know, it is a loony currency. So yeah, CAD Swiss. CAD Yen, again, I'll be looking for shorts on this. Right now we're in an accumulation. So there's a potential nice accumulation break to the downside happening. It's a bit of an uneven symmetrical triangle, but in fact, it's just about to break. Let's just draw it on properly, shall we? So you are just about to break to the downside out of that contraction. So that might be a nice little short break down to ADR today. Swiss yen, again, I'll be looking for shorts on this. The Swiss yen's the worst one really to trade. You look how well it holds up against the intervention. It just completely undid it. And it was like, nah, I'm not going to get slammed down. Swissie's very, very strong. So, yes, still like it short, but again, don't forget the yen has got no protection next week. There's no news on the yen. So the Swissie will be in charge next week. Regardless of what happens with its rates, if it comes out as expected, we should have a strong Swiss. If it comes out better than expected, we'll have a strong Swiss. The only way we'll have a weak Swiss is obviously if they don't go up to 0.5. And I don't think if they don't go up to forecast, which I don't think they will do. But they've caught us by surprise before, haven't they? So euros bullish. So the eurozone is getting more and more bullish. Everything Lagarde is saying at the moment is hawkish. The numbers are all doing well. So yeah, we kind of are long. It's very hard for me to swallow, but yeah, we are bullish euro now. So I'm kind of sideways to bullish on the euro. So more interested in longs than shorts on everything euro at the moment. Again, it's all going to come down to the figures, the refinancing rate next week. So the interest rates, what they do with it will obviously determine how bullish or bearish it goes. They need some good PMI figures to back it up. But, you know, there's no reason why we shouldn't see a good move on the euro moving forward. But I don't think it's going to be particularly strong. I think we're going to get fits and spurts into interest rates like the one we had there, and more of that sort of movement, because it's still, you know, everybody is still getting hammered financially, economically. You know, it's not going well anywhere at the moment, but some countries are regaining strength a lot better than others. So, and that being one of them. So, like look alongs on that. So, any extensions to the downside potentially, I'd be interested in on the euros. Obviously, that one was prior to interest rates. So, you had to be pretty brave to take a long there, because at that particular point in time, obviously it was getting hammered. But lower time frames, you've had plenty of opportunities since the interest rate rise. Actually, you haven't. You've had two. Yeah. So this just shows how weak it is. Yeah. So although it is bullish, it's not one that is going to run away into a trend, I don't think, the euro. Which means that, you know, you're going to get a lot of sort of slight upward channel movement, I think, on the yen pairs, which is great because any pullbacks obviously will tend to be somewhere around a support level as well, which gives you that extra confluence to go long, and extra confidence as well. So yeah, like it as longs. Euro odd. Euro CAD, obviously this is off the charts because of the CAD weakness. So yeah, same situation at the moment, but we need to see what happens with the CAD rates. So again, we need to see what happens with the Euro rates. I say everything next week. This could come to an end very, very, very abruptly next week. We get Euro deciding not to do something and CAD deciding to do something better. That could come down. But we've obviously had the CAD numbers. And they've done as expected. So they've ticked their box. Now it's down to the Euro. What's the Euro going to do? So again, all down to fundamentals and directional bias. The market will change its mind depending on what it sees. Euro Swiss. Sorry, what's happening with the DAX? I haven't been watching. I've been stopped out by the looks of things. Yeah, small loss. So 2 break-evens and a loss on the third. Just not managed to get the momentum at the lows. So it's just a gap fill play basically out the gates. See where we go from there. Euro Swiss. So Euro Swiss. This has been obviously in a massive downtrend for such a long time. But that is sort of coming to an end now. So Euro Swiss tends to be a very low ADR pair and goes sideways a lot when we've got economic issues. So the Eurozone's been battered to death, obviously, over the last few years. It's lost all its income through holidaymakers, which is it was its main sort of revenue generation. That hasn't returned to normal figures. It's been declining, but now we're getting inflation as the main driver and interest rates. It's obviously doing something about it, and we're starting to see that strength come back in. But with that comes the Swiss franc being part of the Eurozone. We tend to get a lot of this. So I think for the moment, we will see that sort of wide range coming back in again on the Euro Swiss. Again, depending on what the Swiss franc and the euro do with their interest rates next week. But I'd be more inclined for literally taking any extension on this pair. But it's very low ADR, so don't expect to make a lot of money very fast out of it. Unless there's any news events coming up which can drive ADR hits and things like that. So sideways, trade it in both directions, really. If you can find an extension. Obviously, you haven't had one for a while. We haven't had one for a couple of weeks, which was down there. The week before was up there. So, both of those played out. And that's the sort of price action, assuming they both increase their rates to what they expected them to be, and they both get fairly similar inflation figures. I think, yeah, we'll continue on a sideways momentum with that one. But it's the sort of thing you'll probably be stuck in for a couple of weeks at a time, potentially on a position trade. So nowhere. Same with the euro pound. I'd much rather be longing this euro pound. Pound is going to be continuing weak. Again, figures are going to determine that, but you can see it's already gone into range. We are big trading partners, euro and pound. We've always had a low ADR. We've always moved, even when one's winning with the euro pound, you always get, it's very hard to find actually a trend on the euro pound. It just doesn't do it, but you always get that sort of flow where it doesn't matter where you get in, which direction you get in, really. You're always going to get an out on it, and nothing's changed. Obviously, forgetting Liz Truss, we that's what we do with the euro pound. It's a lovely range. Somebody actually said in the Telegram group, didn't they, the other day, I'm looking for a range bound pair. This is it. This euro Swiss from now onwards, or the euro pound, those are your ranges. So yeah, great for hedging. The hedge set file worked very, very nicely on that with market reversal alerts EA. Euro yen. So again, say shorts. If the yen powers up, it's going to smash it. Otherwise, I foresee sort of gradual grinding sidewaysy type move with this one. But again, it's all going to depend on the yen. So I don't really think this is probably the best thing to trade at the moment because the euro's not weak enough. Pound yen would be a much better short, I think, when the yen powers up. But we're not seeing anything, are we? We've had these little spurts of coming to life, and now it's gone quiet again for a week. So we will see what happens. But we may well see the yen dying and fading away again. We'll have to wait and see, won't we? But at the moment, I kind of like it long based on the intervention. They've stepped up. So I think we should be seeing shorts on everything against the yen. Euro New Zealand, again, looking for it to recover from here. The New Zealand dollar's had a very, very strong run. It's due a pullback. It's due a rest. And we obviously due some strength on the euro. We've just had a reversal. It's just retested. It's holding up well. So we're just looking for a next leg upside on this one. So any extensions to the downside? That's the only one you've had really back there. Be looking for longs on it as the New Zealand dollar hopefully starts to weaken off a little bit. And obviously euro then can take advantage. But again, next week, we've got nothing on the New Zealand dollar, obviously, as we know. So we have got the euro. So we need positive. We need as expected or positive numbers, which there's no reason why we shouldn't get them. And then we should be off longs. So it's in a good spot now at the moment for longs. You could take some range break highs. So reversal alerts on it. Take any longs you get. So that one there. And just scale in, basically. Euro US dollar shorts. This is one of the only shorts against the euro. Again, reliant on obviously the Fed doing the right thing on Wednesday. But we're double topping at the moment. We've had the reversal alert. You can see obviously we've got a very strong euro today. And look what's happening with euro US dollar. It's not as strong as the US. It never will be. So if we get positive rates on the euro, positive rates on the US is going to win. So I think with this weakness that we've had on the US dollar recently, which has caused the euro US dollar rise, assuming that starts to peter out next week, we will see this trend break and continue back down to the downside. So I'll be looking for this sort of continuation, really. Just trying to find out when this actually broke. All the way back here. So this is where we are now. Yeah, that's where we are now. Yeah. So we've just got the reversal alert. This is what I would expect to start to kick in moving forward. But that is dependent on Fed rate and euro rate, which, you know, if we get a negative euro rate and a positive Fed rate, then yeah, I mean, this is going to come down like a house of cards, isn't it? You want to get on, hold on, and don't get off. Pounds all week. So the news for the pounds next week, we've got Bailey speaking on Tuesday after the GDP figures. So if we get a miss on GDP, that will start that movement to the downside. Not sure what the forecast is, but you know, we've missed the last three. Nothing's changed. Monetary policy's changed, but that's not going to change GDP figures. We got Bailey speaking ahead of the inflation figures. And then obviously we've got the rates. So Monday, Tuesday, Wednesday, and Thursday, all pound. And then Friday, we've got retail. So literally, and PMIs. So literally every single day next week, we've got pound news. I think if you put a speculative short on any pound pair now with a stop, a decent distance above, and if we get what I'm expecting to get, which is either positive CPI and positive interest rates, and the market doesn't react with a positive move to it, there's nowhere for this thing to go but down. And it's just going to take the opposite currency to get a decent number, and the pound will weaken. So you've got potential here if you wanted to enter a swing or an investment trade even, for this thing to come down dramatically. We need to obviously see what they do, but pound US dollar, for example, we're not far off of parity. And I think we're going to hit it. I don't see any reason at the moment with what the Fed is saying and what we're saying in the UK as to why this isn't going to take a nosedive at some point soon. And obviously, you know, we've had a weak US dollar, which has given the market a chance to rally. But that's all come to a head, and we are going into an accumulation now. So push, accumulation, pull. But I think the next pull will take you down to these sorts of levels where we had, the Liz problem. But look at the previous trend, yeah. Liz Truss, Bank of England intervention, coupled with a weak dollar straight afterwards. That's the only reason we've got this move. We had momentum built off of the pound, where they started digging themselves out of it at the time that the US dollar started to weaken. So this is not anything but a coincidence of timing, which is going to and has already shifted. And next week, that is what we should be seeing next week. Figures should be backing that up. So I like the idea of that as a short from where it is right now, from a technical level as well. So we've got this area we're stalling at again. So it just looks good, doesn't it? But again, it's all down to figures. So we need to see what happens with the figures. But if you hit the sell button now, let's say on this reversal alert here, and instead of sticking a stop there, you stuck one up there. I think we'll probably be down here by the time we get to the rates next week, and then we should be good for shorts. So it looks good. But obviously it's coming up to Christmas, so you've got that whole Christmas period where you're going to have light liquidity and range bound activity. So again, difficult, very difficult at the minute. Timing's just all wrong for everything. This is the stupidest time to do all of this. Really is. There's obviously a reason why they do it, but just before Christmas, you're announcing all of this in 1 week. It's almost as if you're saying, right, we're unraveling everything this week, guys, and we'll see you in the new year. Good luck. And then we got the Bank of Japan, who are going to change their monetary policy straight afterwards. They're always behind. They're always different, aren't they? But yeah, anyway. So pound, I'm short everything pound. Pound New Zealand sideways, looking for a break to the downside. Pound yen, waiting for some yen strength. That should drop like a rock. Pound Swiss, we've got a strong Swiss franc at the moment. You can see everything on the pound is like this at the moment because there's not been any fiscal policy to give us any direction. We've had this cock up. It's just waiting, I think, for a drop. But they may well come out next week with some kind of plan that is like, oh my God, this is going to be the thing that drives the pound. But positive interest rates, positive inflation tends to be positive currency. The last times we've had things happen, we haven't had a positive reaction of the pound, which tells you how bad the economy is. So the economy hasn't changed, so I can't foresee any interest rate rise or any increase in inflation actually having a positive effect. Maybe a little bit, you might get like we had with, CAD and things, but not long term. New Zealand's, so again, New Zealand we know has had a very, 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 very strong couple of months. We're coming to the end. We've not got any rate announcement on New Zealand until February the 22nd. So there's no interest rate changes coming. So we've had the New Zealand being ahead of the game, and it's managed to sustain itself very, very well against a lot of things. Since obviously all of its figures have come out as positives. So there is only a limited amount of time something can do this before the other party steps in to do something about it. Well, not so they don't do something about it just because of the New Zealand dollar, obviously, but overall, if something is weakening, it will start to strengthen. So New Zealand's been very, very strong. It's been battering everything down. After a buy cycle tends to come a sell cycle. Whether that sell cycle is a pullback or a reversal, we don't know until things start to obviously unfold. But when you get something this extended, looking at the daily chart, we just this is just not something that's ever happened before. So when you get to that level of extension, you have to look at it and go, at some point soon, there's going to be the mother of all collapses on it, because the market participants who have got long positions on here and have not been given an opportunity to get out. Yeah, you know, the big players will not get out because you've got one bearish candle, right? They need some, you know, you need some kind of reason, some kind of signal to exit. We haven't had a down candle. Forget that one that's kind of is a down candle, but we haven't had one for 1, 2, 3, 4, maybe 5, 6, 7, 8, 9, 10, 11, 12. Nearly, I mean, we're getting on for 3 weeks. It's just off the scale. I've not seen anything this big on a daily chart for a long time. If you look back at history, when you have had things that get that extended, this is where the analogy comes in. It's not my analogy, I didn't make it up, but climbing up the stairs and falling down the elevator shaft. When things go parabolic to this extent, the move in the opposite direction tends to be parabolic, because the first instance you get of, for example, a bearish engulfing like that will wipe so much off of the long positions that there will be orders set on a break of that low to just get out. There'll be sell orders set there. And as soon as those sell orders trigger, it creates a speed, momentum move of sellers. As soon as anybody that's not in this market sees that movement, they get on board, so because they don't want to miss it. And that creates that momentum. And this is why you get the elevator shafts. It's not because there's suddenly a load of people interested in doing one thing. It's because all of these participants are wanting to exit with profit. It's not speculators getting on, it's speculators getting off, which is what causes the elevator shaft to happen. So this is obviously very, 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 very tall set of stairs we're in at the moment. New Zealand dollar Swiss. Yeah, so there you go. Look, that's a good example. You get the unraveling happening like bang, quick. And this is what our pullbacks are. Yeah. Or we get complete reversals, which are obviously less common. So this is, that's the candle, right? So selling, no reason to get out, whack. Someone took a massive profit, and then the market went, yep, me too. So the elevator shaft obviously is upside down in this particular example, but that's the sort of thing you would expect to see happening. New Zealand dollar Swiss, obviously the Swiss franc has been a lot stronger. So when the Swissy powers up, the Swissy takes control. Yeah, we get big pullbacks in the Swiss franc. The yen, we've had obviously the interventions, and we've had yen strength, which has completely held it in check. And that shows you how strong that has been. We know how strong the New Zealand dollar's been, and the yen has not let the New Zealand take advantage. So when that yen, if we get it strengthening, and again, the week after next, we've got the monetary policy for the yen being announced. We've got nothing on the New Zealand dollar. So if everybody starts to pile into all the other currencies, they will be removing money from the New Zealand, because the New Zealand move is over. We get yen intervention the week after, and bang, this thing comes down as well. So it's all pointing to a slowdown stroke pullback stroke reversal in all New Zealand dollar pairs against the US. But again, I keep saying the same thing over and over again, but it's because it is the most important thing. Why can't I get to that? We've got all the rates and everything next week, which is going to determine whether or not any of this happens. If these guys all come out with negative figures, we've got GDP figures on New Zealand. So yeah, I mean, if we get a big miss on that, we might have a little bit of help as well there. So, but if all of these guys come out and they miss completely, New Zealand's just going to carry on, isn't it? This is what I say. And people say all the time, don't we? And I say it. It's got to come down at some point. It hasn't got to do anything. It will do what the market participants see from a fundamental perspective. If the CAD comes out with some massive negative news next week and the GDP figures are an increase on the New Zealand dollar, this is just going to continue going. Now, just because the RSI is extended doesn't mean it's coming down. We know that. We see embedded RSIs all the time, don't we? It's just that we know that at that point we have got a lot of market participants wanting to go short, but they need a reason. And if they don't get given the reason, they're not going to. So we will see. But they're certainly all teed up, ready. We've got obviously New Zealand dollar Swiss there, if you're looking at that we've gone into an accumulation for a week. We had a massive bearish move, tried to push up again. Bears took control. Bears took control. Bears haven't let the buyers take control at all. So, we have got some moves starting to weaken. It's not that the Swissie's powering out. It's the New Zealand dollar has just lost its fight. There's only a certain amount of people that are going to buy it, and you're going to go, I've got so much exposure. Don't forget, obviously, every market participant has got exposure to look out for as well. You can only have so much exposure. You can't put everything in the New Zealand dollar, because if there's an earthquake and New Zealand dollar gets put underwater, you're bankrupt. You can't have exposure in everything, obviously. So, it's just running out of steam, I think. So I'll be looking for short opportunities, New Zealand, but I need to see some signs of it starting. So, New Zealand dollar yen, we've got a definite, ceiling here, haven't we? We've hit a ceiling. Every time we attempt price discovery outside of that level, we get rejection. So, but again, we've got a wedge forming, which is potentially a bullish signal if you believe in that stuff. But personally, more interested in the fundamentals. US dollars, long everything US dollar, not so much against the yen. I think that's more likely to go sideways. But US dollar CAD, until we get some oil strength, and even then, oil is a big part of the dollar as well. So you get some strength on the CAD because of oil. You're going to get strength on the US at the same time. So that's going to cancel itself out. We got positive potential figures coming for FOMC. So looks to me like it's a long, has been a long. Obviously, we've had that big news spike there. But if you look at it, really, we're not going anywhere particularly quickly, are we, at the moment? So we're getting fits and starts. It's more of a long than a short, but it's very difficult to get into because it's only driven by news. Again, trade partners, close trade partners. So Aussie, New Zealand, Euro, Pound, Euro, Swiss, and US dollar CAD. All very, very, very strong trade partners and have an awful lot more range-bound activity unless one has, other way, completely opposite fundamentals happening at the same time. But if they have got the same fundamentals, we tend to get a lot of ranging on them. But like it at the moment, it's a long. And US dollar Swiss, obviously, we've kind of covered. It's the hardest one to get long because the Swiss franc is always so strong. But where we are at the moment is down bottom of range. So double bottom bounce potentially at previous resistance. So potentially we could be seeing starts of a pullback here. And there's a, don't forget, that's a massive propulsion gap. Yeah, on the daily. That was a hell of a break and a hell of a collapse. And we've come back up and retested into this area here, but we haven't come back up and retested that area. I think we probably can. So I think there's a lot of good upside on your US dollar Swiss, but we'll find out next week, won't we? We've had, don't forget the Swissy, we've had the shock in that direction. We haven't had a shock in that direction. So if they come out as a forecast, I don't know what the forecast is going to be. I'm assuming the forecast is going to be a 0.75. Again, they're very tight-lipped to the Swiss. If they come out with a 0.5, US dollar Swiss is going to go through the roof. So we'll see. But it's flip a coin, isn't it? You can't make any decisions. Alex, Aussie New Zealand M15 reversal and a retest. Yep, nice reversal alert gone in there. We're very tight at the minute, but yeah, looking good. So looking at the Aussie New Zealand, obviously we've had the push yesterday. We got the reversal alert on the 4 hour. On the hourly, obviously, we had the reverse alert. We came back down, retested it, and then we've pushed up. So yesterday we had a lovely bull day. So for market structure to continue here, we've got the reversal alert, the high, the low, the higher high, the lower low. We're looking for a higher high. We're looking to challenge this high. So I'm looking for an ADR on it. This is the main area of contention. We've got an area of accumulation which the sellers took control of. So we're going to find selling pressure there. We're going to find selling pressure in the form of limit orders at the double top. So we need the buyers to take control, break and hold. That's what I was looking for yesterday. As I said, I was looking for a break and hold. We got it. Just though, you know, it wasn't convincing. It was, we got it. Well, we got it. We got a break and hold. We're looking for that level, then we're looking for that level. And that's the ultimate, I think, interim target is 107,500 roughly. Somewhere around there. It's probably, I'll just put it on the round number. Would make sense, wouldn't it? That is what I think is our target. And then we need to see what happens as to whether or not we are going to continue trend or whether we are going to break trend. And again, so we're going to come down to numbers. So we've certainly had a positive start from the Aussies. Negative New Zealand GDP figures next week would be so beautiful. I mean, it'd be lovely to get negative GDP. But look at last time, yeah. A negative 0.2, forecasting a 1. They pulled in a 1.7. It wasn't just good; it was astronomically good. So I don't know. Have we been buying a lot of milk? I only found out recently that the main export of New Zealand dollar is milk. I really didn't know that. There's no milk market, is there? You know, it's not like you export it. And obviously, cattle is a lot, well, meat, lamb. But yeah, I really didn't know that. I thought it was a hacker. Anyway, so that's all for today, really. I've got DAX, yeah, nasty again. These indices at the moment are really nasty and choppy. Very hard. I had a really hard day yesterday on the futures. I managed to pull out a $60 loss yesterday, but it was up and down all day. The new EA on this account made a profit yesterday in the New York session. I caught the drop yesterday beautifully. At the open, where are we? There. So I caught that short yesterday, made some nice profit on, I think it was that one yesterday. Yeah. So it was the Dow short yesterday. Oh, sorry, no, it's Dow long. No, sorry, I caught the pump on it, not the drop. So there's your open there. So as you can see, took the opening range break, second opening range high out up there. And the NASDAQ buy as well. But where's that one? Oh, there. Small one there. Yeah, that was it yesterday, I think. Oh yeah, no, RB1. There we go. That was on the reverse of that as well, but so yeah, pretty good yesterday. So we'll see what we do in New York. It's the beauty of this EA as well. You get 2 bites of the cherry. 3 bites of the cherry because I'm trading 2 New York indices and obviously the DAX in the morning. I haven't tested anything on the FTSE yet either, but when you look at the FTSE, a lot of brokers don't have FTSE, I find as well. But the FTSE and the DAX do look quite similar. The FTSE is actually a lot nicer. Look at this horrible mess that's impossible to make money out of. But actually, FTSE is a lot more organized, isn't it? So this is another one, obviously, that's worth testing on. I haven't got data on the FTSE though, so I need to get the data. I'll have to buy some data and test that. But there's another option there. So yes. What I've got the EA ready to go basically. So what I'm going to plan to do, I've got to do all the retesting again, which I'm doing. Testing so far is fine. It's work. What I've tested so far is not a million miles away from where we were previous, basically. So with the previous testing that we had, where are we? I tested DAX to death, and obviously I found that bug. So I'm retesting the breaks and everything, they're sitting in exactly the same way. And what I'm finding is that the figures are obviously very different, but the thing that is the same is the profit factor. So the profit factor that I had on the previous results is very similar on the new EA, which is great and is kind of what you would expect, because the only thing the old version was doing, which had the bug in it, was over trading. So it was making bigger losses when it lost, but it was making bigger returns when it's won. So the profit factor isn't actually that much different, because yes, the drawdown was bigger and the profit was bigger. So this was bigger by the same amount as that was bigger. So by having this working properly now, we're finding we're getting much smaller drawdown percentages and smaller profits. This is only trading with $100 risk, this one at the moment. But this thing in the middle here, we're getting roughly the same. We're getting somewhere in the region of 1.4 to 1.8. So as an optimized setting. So yeah, I think I don't have a problem with pumping the EA out there without lots of testing being done. And obviously you can do your own testing if you want. And I've got all the inputs done. It's called range break. And you can use it for any range. So I've tried to move away from the opening range breakout terminology, because you can use this for any range break. It's a range break EA, but obviously the best range breaks, in my opinion, to trade are the opening ranges. But you could literally trade any range break with it. So the inputs I'm going to leave in are as follows. You've got your money risk. You can set a TP for each individual break. Although I don't use them, my testing found that that is actually not the best thing to do. You let them run. Don't take your profit. Don't take a 200% TP off of the back of your stop loss size. You know, if it's going to give you 600%, don't take 200. Take 600 and let it trail. So I'm leaving those in there because people are going to want, you know, the risk rewarders out there are going to want to go, I want a 3-to-1 risk reward on that one, I want a 4-to-1 on that, and a 5-to-1 on that. It's fine, you can do that, it'll work, but you won't get as much money. Fixed pip stops, I'm finding way more effective than using opposite side of range. So at the moment, as you can see, what I'm doing is taking the other side. So buy stop there with a stop loss, the opposite side of the range. This actually is not the most efficient way to do it. But this is just what I'm using, because it doesn't matter, because I've passed the evaluation, so I'm just leaving it to do whatever the hell it wants at the minute. But the actual best way is to use a fixed stop. That's much more productive. And it produces much better results. So that is in there. Auto exit percentage, I'm leaving that in there. This is going to be useful for people wanting to pass prop. I leave it at 10, because if something goes so far, this is a multi-day move. You're not going to get to a 10% profit without a multi-day move. But you get these days where they just go parabolic, and then the next day it will gap up a little bit of a pullback, and it'll go parabolic again. Take those 10%, because what I found is I tested the 10% to 20% range, and it made very little difference. What you find is there's very few opportunities to hit the 10%. You might get 2 or 3 a year maybe that will hit the 10% run, those home run trades. But most of the time your trading stops are going to take care before we get anywhere near that. because the market doesn't do that. The market does that. Yeah, if it wants to get from there to there, it doesn't. It does it like that, doesn't it? So you're always going to get trailed out with a profit. Obviously, trading times, when's the open, and what are the 3 ranges you want to use. When you want to stop trading, yeah. Again, you could put that to midnight if you want. Just let it go all day. If something has a massive opening range and then it accumulates for an hour and a half and then goes like that, if you want to take that, take it. Just make that midnight or whatever. Whether you want to take the 3, again, I haven't tested this. The whole idea of this is to add to positions. So you get a break, add to it on the 2nd and 3rds. Yeah, that's the whole idea, is adding to your winning positions. But I haven't tested that. That will reduce your drawdown dramatically, obviously, if you just want to take 1 break. But again, the Price Action Toolkit already does this. So if you're looking just, no, I'm going to always have that turned off, Price Action Toolkit's already got 2 entries, so just use that. That's the same thing. This is just simpler, obviously, a lot simpler. Activate on bar close. Bar close is way more effective than on tick, but you have the option to test that if you want to. I have tested it, and I've found that on tick tends to stop you out too quickly, because price does things like this. I can't get a better example. Price does things like that. If you had an on tick trailer, that candle there would have adjusted your stop. On close, it would adjust it there, not there. So I find you get stopped out a lot faster. It does keep the drawdown a lot smaller, but the profit, you miss those runs because of the stops. So again, I'm going to do a video on all this anyway, but obviously trailing stops, break evens, and your moving average stop is the other thing that I've tested, which works very well. Again, I've only tested 9 because that's the one I've always used for intraday. IM5, I've always used a 9 or a 5. I haven't tested 10, 20, 50 or anything else. Again, they could be amazing, but you know, there's only so much testing someone can do. And adding to single trades. So obviously, if you get an example like we've got today, where you get the opening range breakout to the downside and it's all played out, you've only got 1 position long because the opening range high 1, 2, and 3 are at the same level. We only enter 1 position. So if that does break to the high, we want to add to that position if it starts to work. So that's what that's for, that input. Add to single trade. So if there's only 1 trade running, we can add to it, and we pick a distance to add to it. And typically, I've found that to be the best, the break even. So my initial testing was whatever you have your break even set to, that tends to be the best thing, because what's happening is you get the initial break to the upside, moves 400 or 40 points in your favor. So the best thing to do is add another position there, move this one to break even. So if you get a strong reversal, you don't take a loss on that. You only take a loss on 1 position. So I found that keeping those the same or similar helps, because you know what we're doing is we're going long, we're adding, and we're protecting that. And then the ideal is that. And then the 400 will protect that. So you'll have 2 trades protected, and then the trailer kicks on this one to pull that one up to there. You're guaranteed profit there. You've locked in no loss there. And if it does that, we just keep trailing until it goes down. That's the whole idea. That's a trend breakout. That's exactly what this does. It captures trend breakout. And obviously, the thing that people don't do is they don't add to their positions, which is what you should do if you're doing that sort of trading. So it's all done, all finished. I've tested it visually. It does everything that I've tested it visually, and it functions as it should. I haven't found any bugs. I'm sure people will. I'm only testing it on Forex, and I'm obviously live testing on my Forex funds. So I've tested it on 2 brokers. I can't really test it to death on every broker, everything. So there's, you know, It's designed for indices. Yeah. So if you come back to me and say it doesn't work on deriv, VIX, blah 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 blah, no, it doesn't. Probably, I don't know. Okay. And it won't be advertised as that. It will be very clearly stated that this is designed for indices. If you want to use it on anything else, feel free, but I'm not guaranteeing it'll work. So if you trade your broker's con index, whatever they want to call it, and it doesn't work because you need to trade to 27 digits, I don't care. Stop trading it. It's crap. This is designed for opening range breakouts at index opens. That's it. It will work on Forex and it will work on everything else, but there's no point in Forex where the market goes explosive, is there? Forex moves when Forex moves. But the other thing you can use this for as well, which I haven't tested, is news trading. So obviously what we see a lot of the times on news events is a spike. So let's say, for example, that was a news event. There's your second entry. So, you know, it can trade news as well. There's another use for it. But again, I haven't tested any of this. So, you know, when you got your Forex calendar as full as next week, stick it on US dollar CAD, stick it on pound US dollar, stick it on whatever you want to, and see what happens. I don't know. This is what testing is all about, isn't it? But you know, I could call it the news trading EA. At the end of the day, it's just all it's doing is trading ranges. It's a breakout. Mean reversion, trend trading, breakout trading. They're the only three things that exist in this industry. This one automates one of them. That's literally it. Designed to catch the very start of trends after breakout accumulations. And you can make those accumulations as big or as small as you want. Yeah. So, you know, it does it all. You know, this one here, for example, this set file, you can see this set file, there's what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 set files there, all producing the same results. The reason they're all producing the same results is because they've all got a 100 point or 100 pipette 10-point trailer. So it doesn't matter what you set your break-even distance to. If you've got a fixed stop of 100 with a 100 pip trailer, you're going to produce the same results. So, you know, a lot of this testing that I'm doing, you get duplicate results, and it just tells you, if I do that, I'm going to get a small drawdown and a 1.37 return, regardless of what I set any of this to. This is the purpose of this, is to find this out. And then obviously I'm doing all testing now. I've changed the way that I'm testing. All my testing is done with a fixed 100 $100 risk. So it's $100 risk on a $100,000 account. Yeah. So if you are trading a 100K account, you will have a drawdown of 12%. So it's 12,000. So if you're trading a $100,000 account in prop, you can double the risk to $200, and you know that you will only draw down by 12K, worst case scenario. So you will produce a 42K profit in a year. This is a year testing as well I'm doing initially. I haven't done it out of sample yet, but it's all the same. If it's going to be the same, which it seems to be as my previous results, out of sample is going to be the same, isn't it? So you will get a 12K drawdown and a 42K return, which is somewhere around about 3,300 a month, which you will get 85 or 80% of. Yeah, on one instrument. Multiply that by 3 instruments. There you go. Need I say more? But anyway, let's get this testing done. So I'm happy to push this out into the marketplace, but I haven't got any documentation on it yet. So I've got to draw some documentation up. I can't just stick it on the marketplace and go, here you go, there's a blank product. So I've got to do some work on it. So that's today's job and possibly this weekend's. I'll see how far I get. But But yeah, I mean, it's past me. It's past prop for me, isn't it? We've seen it live in the last 2 weeks. I've been using it. It's past. So I love your brain, Lee. Really looking forward to your initial release. Cool. I love my brain. Pretty handy. If I didn't have one. I know a lot of people without them. half of them think they're going to earn a Lamborghini next year. There you go. Are the results looking better? No, so they're looking the same. As I was just saying, the results are looking very, very, very similar. Just smaller. So where I was getting 1.37 returns as a profit factor previously, I was seeing 118k profit, but I was also seeing 31k in drawdown, and that's because the bug was causing much larger lot sizing to be taken on the breakouts, and it was doubling the breakouts up. But that factor stays the same because the same thing's happening if you think about it. Yeah, whether it breaks up or down, and whether it adds 2 positions or 1 position there, or 2 positions and 1 position, it doesn't matter what it does at those breakout levels. The price, the action that's followed is the same. So it's either made twice as much or it's lost twice as much. So therefore that is multiplied and that is multiplied. But the factor between the two doesn't change. If I now have the EA fixed and on each secondary and third breakout, which is where the bug was, it now only takes 1 trade and not 2 trades, all that's going to happen is it's going to make less money or lose less money, but the result will be exactly the same, which is your profit factor. Your payoff will be different. Your total trades will be different because it was taking 2 trades where it should have been taking 1. So there's less trades, which is no problem. But those things will be different. But that's the, and this is it. This is what you look at. This is the most important factor, is your profit factor. What is its return on investment? Or in this case, drawdown. That's the important thing. If you put it on 3 instruments, then you need to reduce the risk amount to not risk blowing the account. Yeah. Or increase the account size. Or put it on 3 separate accounts. And that's what I'm going to be doing. So I'll have one prop running DAX with a set file that I know is safe. I'll have one running Dow, and I'll have one running NAS. And depending on testing, I might have one running the FTSE. And obviously we've got the S&P as well. But I've in my testing initially, I just couldn't get a profitable set file in the S&P. And I don't know if it's my data or the settings are so different, or the price action is so different on the S&P. I just couldn't get a profitable thing out. So I haven't really pursued it. And but obviously you've got that option there. So if you say I'm going to maximum 12k on a 100k account, that's going to be a like 42k return, or I don't know what the return. This is previous. It's got nothing to do with the future. Obviously, don't forget that. This is backtesting. Backtesting has got nothing to do with what's going to happen next year. We could have a COVID outbreak that we've never seen before, coupled by 2 earthquakes, a world war, and an alien invasion. I have no idea what's going to happen to the market next year, where the volatility is going to go through the roof. We're going to go bull, we're going to go bear, we're going to go tight volatility. I haven't got a clue. So what's happened before has obviously got nothing to do with the future. But if the future over the last 3 or 4 years, which it's always made money on, repeats itself, and we have a similar-ish market, if you put this on 4 indices with a safe setting, you multiply your profit by 4. But you're quite right. If you put all 4 on one account, you're going to run the risk of potentially blowing the account. But also you're going to run the risk of having a run-up on your account, which means that you've actually got more drawdown. Because don't forget, if you've got a 100k account and you trade it up to 150k because you have a decent run, you've now got 50k of drawdown available to you. You can draw down the whole lot. Yeah, because your drawdown only follows you up to your account balance and then it flattens. In CFDs, in futures, it's different. You have a trailer, but actually you don't actually in with some firms. Depends who you go with, but so yeah, so I would look at doing that. So what I'm looking for is one aggressive set file, which is designed to try and get past fast, and then one conservative set file, which is going to have smaller drawdown, smaller return. So the aggressive will pass, and then the conservative will take over, and just gradual with very low risk. Again, these are all the maths that you have to do. You know, if you stick it on a 250k account, obviously you've got 4 times as much to work with, haven't you? Well, 3 times more, roughly, to work with. You can draw down by about 30 odd K. So you could multiply that by a lot more on a 250k account. But I would rather have 4 accounts than 1 250. I'd rather have 4 50kers or 4 100kers running 4 instruments than 1 250k running the lot. Oh, obviously, I'd rather have 4 250ks. But the trouble with 250k accounts is they're going to cost you about $1,000 to $1,300 just to do the evaluation. You know, you can fail an evaluation. So it could cost you $3,000 just to get 1 250 account. Whereas to get a 50k account, it's going to cost $300 or $400. And then you're actually making money, aren't you? So it's better to start small. And obviously, don't forget, these will leverage up. When you've passed profit targets on these, they'll double your accounts as well. So you're automatically going to get increased money. Or, you know, if you've got the money, stick it on your account now and forget about it. Go with the one that makes the highest profit with the biggest drawdown. None of these have got massive drawdown. I mean, how many? That's be interesting. So we've run 175 simulations so far. We got 175 passes. Again, it's the same thing as I had last time with the testing. There is not one variation of any setting so far that's failed. Every single variation, permutation of settings is profitable. 176 just gone in, profitable. You know, worst case scenario, you're only going to make a couple of grand. Oh, well, you haven't lost money, have you? There's not many EAs out there you can do this kind of robustness testing on, and they just go, yeah, whatever, I'll survive. And that's the difference. You can't tell the market what to give you. The market gives you what the market gives you, and what settings you've got this year and for the past 2 years. Maybe they're not the best ones moving forward, but you don't know that, do you? We can't tell the market what to do. The market tells us what it's going to do, and it gives us what it's going to give. If it fancies running parabolic like New Zealand dollar CAD has and goes absolutely off the scale, then fantastic. Let it do it. Don't take a profit. Let it go. But so far, that's the best profit factor. Keeping it tight. Look, keep it tight. That's what the EA is saying at the moment is the best thing to do. And, you know, don't forget this as well. This drawdown here. I need to test all the equity curves as well, which is what I was doing when I found the bug. I was going through equity curve testing to see exactly when this drawdown occurred, to see what impact it's going to have. And then I discovered the bug and was like, but this equity, this 6K drawdown, it could have happened literally at the very start and then gone like that. We don't know how this drawdown occurred and when it occurred. So if it occurred here, from that moment on, you could, in fact, like quadruple your risk, and highly unlikely you would ever get that drawdown hit. You could make 4 times as much. Depends how aggressive you want to be. You know, if you stick this on, this is all on $100 risk. If you stick this on a $500 risk, one or two things is going to happen. It's either going to have, you're going to hit it at the unlucky spot where it's going to blow it, or it's going to go tonto and you're going to bank 20 grand in a month. Take it. put that 20 grand into 4 evaluations for 250k accounts and get yourself a million funding. You know, you can use it, and there's lots of different ways to view prop. Just don't tell them I sent you, obviously. But I think they're getting there's a lot of prop firms getting very relaxed on EA usage now. You know, it's the anything goes. They just want people to take evaluations, and they assume that most people are going to fail, which is true, isn't it? 99% of people just fail all the time. I've failed enough. It's just what you do, isn't it? But anywho, so that's what we're doing with the Aussie New Zealand. So we've broken up Aussie New Zealand, bit of a pullback at the moment, so that's all going the right way. What's New Zealand CAD up to? Yeah, it's pulling back off the highs as well. So nothing really moving much. Again, as I say, today it's all a bit. I think we're going to get a bit of a mare day today. Don't forget it's a Friday, and we've got, once this PPI is out of the way, I think we'll probably have a little bit of a rest. So don't expect anything exciting. But I'll work on this today. As I say, you can see how long the testing is taking me. This test is going to be finished on a Sunday. And this is just one instrument. So, you know, I can't do any videos in any detail, maybe even this side of Christmas. So I will put it out there. I'll put all the instructions out there. I will put some back tests out there. What I will do is I will do some back tests. I will run some back tests with equity curves, and I'll put some examples out there of set files, but I won't be able to give any conclusive full details, just because obviously the time it takes to run. This is a 12-month run of 5,000 permutations, which is a 60-hour job. So if you guys want to get it and do some testing, we can all put it in the pot. Obviously, you can run smaller tests, which will be a lot quicker. But I'm a thorough person. I'm a little bit anal like that. Little bit of a geek. I need to know. If it's going on a live account with real money, I need to know what it's doing. 100%. Right, so that's it for today. Really excited to see it polished. Yes, hopefully it's not a polished turd. I'm pretty sure. I mean, I throw away everything because it doesn't work, and this is something I've just got excited about. And the most annoying thing about this is it's something I learned a decade ago, and I just didn't poo-poo it until we had all the COVID stuff and that. I just hadn't bothered to look at it. When I started scalping again, I was like, oh yeah, the ORB. I forgot about that. But I never thought to automate it in any complexity. And then, as I say, someone sent me down this path because we were talking about moving averages, and I was explaining how moving averages have nothing to do with intraday movement. And I built this literally to prove a point. Boy, did it prove it! And I've done it. I've tested it. I put moving average. I put higher time frame moving averages on this. It makes no difference to profitability whatsoever. Whether you say I want to use a moving average of an hour, a 4-hour, a daily chart. What's going on higher time frames on the M5 time frame at the open of the market has got nothing to do with anything. That was the point. Does what it wants today, because yesterday stocks were different. Right, DAX is starting to break down at the opening range lows. So this is the most uncomfortable, hideous range-bound pullback you've ever seen in your life, but we are unfolding again. So potentially starting another leg towards the lows. I mean, I'd like to see the yesterday's low tested. So. Right, great live stream. Just subscribe to your channel and website. Cool. So I will leave it there. Anything you need, come in the Telegram group. I'll be in there. Obviously today, I'm just going to be sitting here testing all day today. So, but I'm not going to be testing it. It's going to be testing, but I am going to be doing other things with the EA today. I'll be writing documentation and stuff, just getting it ready, really. So, price-wise, somebody asked, didn't they? I have no idea how much I'm going to charge for it. Did somebody just ask that? Oh yeah, how much is the new EA, Alex? I haven't thought about it. It's not going to be expensive. You know, I don't charge a lot of money for stuff. I want to get my time back. I want to be paid for my money, but I don't. You know, I'm not going to make it ridiculous. I don't know. It won't be as expensive as the market reverse alerts EA, but I might make it a bit more expensive than the indicators. Make it free for your best subscribers. No. Who's my best subscribers? I don't know. I'm going to charge for it, to be honest. I'll tell you what I will do. I will do an introductory rate because there's probably going to be a few bugs in it. So I'll do an introductory rate of maybe 50 or something, $50 or something. And then I'll stick it up to maybe 100. Yeah, you can all beta test it for me. Yeah, so you can be the beta. You can have it off. Yeah, maybe I'll do that. Maybe I'll sell it for $100. I'm also going to put a signal up for it as well, with multiple set files. So there'll be a signal. I'll probably put a signal service up for it as well, so that if people don't want to buy it, they can follow the signals. The name's Ryan, by the way. Ryan Knight. That's a good name. Strong name. It's like Michael Knight. You're probably not old enough to remember Knight Rider. But yeah, you can all beta test it then, and you can find the set files. If you find set files that work really well, but I think you'll find most of the set files work well, as I've just shown. There's very few that don't, is there? We've got 188 runs. We've got 188 profit. So we need to find the ones that are the best, really, don't we? Night Raider. I got into a massive video on him the other day. There was something about the car. I don't know if it's an anniversary or something, but they were going into all the details about the cars, about how many different cars there were and all that sort of stuff, and the technicals behind them, and how the bonnet started melting because the lights on the front were actually way too hot. Technology in the 80s was not there, was it? Just noticed you're from the UK. Was there last week. Back to the US now. Yeah, in the UK. It's where I live, where I've always lived. It's been haunting you for years, believe it or not. Have you got anybody in your family called Michael? Automan was your favourite. Yeah, I used to like Automan as well. Didn't he have a bike, Automan? He used to fly around on a bike. Or was that something else? There was a bike version of Kit, wasn't there? Can't remember what that was called. What was that, Automan? No, thankfully not yet. Yeah, if your dad's name's Michael, that's Michael Knight. Very cool. Street Hawk, that was it. Street Hawk. Didn't last long, Street Hawk, but that was also very cool. Street Hawk. I haven't seen that for a long time. Right, I'll let you go. I'll be back Monday, and yeah, I'll update you on obviously on what's happening with the EA. But we'll have to see how far we get with the testing. And yeah, if you want to do testing, if you want to do some structured testing, anybody that wants it and wants to do some help with some structured testing, you're going to need tick data obviously to do it. So we need some, don't use your broker data. You're going to need tick data. So if you haven't got tick data suites, you can't do proper back testing anyway. But yeah, we can work something out. Right, I'll be back Monday. Have a good one. Be aware, obviously, of PPI this afternoon, and Michigan at 3. So if you're trading indices this afternoon, PPI is not going to affect you too much. But 3 o'clock, half an hour after the open, we've got Michigan sentiment, which you need to be worried about, because that might put some spikes in. But hopefully, we'll just get continuation moves and things start to play out. So see where we go. Have a good one, everyone. I'll be back Monday, same time. See you in the Telegram group otherwise. And yeah, have a good weekend.